Welcome to the Investor Impact Power Talks with Vinney Chopra, where investors gather to share their insights and strategies in the world of multifamily, real estate, and beyond. Get ready to be inspired and equipped for your next level of success.
On today's episode, Rich dives into a 44-unit only waterfront boutique hotel acquisition he had, and three of his masterminds members are closing in on February 2nd, coming up Friday. Hold on. Rich discusses the Bogueda Coast. Hold on, that's up here. Bogueda Bay is right up here near Sonoma.
Oh,
Inn and Suites right there, Daryl, in our backyard, brother.
yeah.
Bogueda Bay, yeah, Inn and Suites history and under the performance in Sonoma County. There it is, wine country, and how the deal came to fruition, touring the property prior to getting into the deal. His blah 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 blah, and then Rich then analyzes the deal itself in this episode. So please do look at it. If you want to look into it. Oh, there it is. Okay, you just click on it, and I could put that right there for you all if you want to. I don't know if you even are interested. Is this the link? I think this is the link, right?
So what is your thought overall, Vinny, on boutique? Because like I keep getting a lot of like boutique hotels in Washington State. I do see those. But what's your overall thought on is that?
Very good, very good. In the sense that, let me share with you, I had oh wow, okay, I just sent it to you all. I don't know if this is good or bad. Yeah, there it is. I think embedded or something. Say if you want to even look at it. No, what I'm going to say again, I know Dave and I talked about it. My CPA and a lot of other CPAs, they say the income from the hotel is active income for the members of the LLC. If you don't do a syndication, in syndication it's LP and GP, limited partner and general partner. So LPs cannot have direct, what's the right word? They're not involved is the word in the business. But since hotel is a daily business, that's what I understand. Again, I'm recording this and I'm not a CPA, I'm not an attorney. I want to say that I'm just sharing the knowledge I got. So if we become member of the LLC and we are able to provide the reports daily, weekly, monthly, whatever to the members, then it becomes active income. So a lot of people love it because the depreciation effect is huge in hotels because there's so much equipment, so much furniture, so much this, so much that. So you're able to write off 75 to 80% of the investment in first year. That's the beauty. And then after that, it just cash flows. If you buy it, I love it. It's 44 units only. Hold on, it says 7 billion in loans. What? This is intriguing to me, and I'll be looking into this one. But the key thing is it's in our backyard. And then I want to find out how he did it. Such a small property on the trade, 7 billion in appraisal value being 10.6. That's what he's saying. Property down to discounting the property down to 7 million as is, and appraised value of 10.6. That's why he said 3.6 million equity right there. Stabilized value 14 million. Is that a good deal? Totally, I think it is. One thing which bridge loan. Okay, he took 70% bridge loan to finance the deal and putting in 1.8 million on the property renovations. So he took one and just made it beautiful. Maybe when I come back from trip, go down there and take a tour of this property just to see how they did. Lastly, speaks on rebranding underperforming properties, what appraisers are looking for, good locations, projections of 62 to 63 occupancy year round, and underwriting the deal to bring it to 2.5 million annual revenues, looking at the sales comps of other local. So Ankur, let's do it. Maybe Dave also might be interested. Let's
Absolutely.
look at some boutique hotels. Why not? And it will be fantastic. Washington, Seattle,
Yeah,
Eugene, Bend, Oregon, where we are building, my
I
partners are
was,
building.
yeah, I literally, Vinny, I found, even as you're speaking, I was like looking on LoopNet and I found like few really good ones based on,
Yeah.
yeah, I mean, nothing this size. So please do
Yeah,
share.
you want to share? Yeah,
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 please
why not?
share.
Like,
Uh-huh,
I'll give you
please.
some examples, okay? So,
Uh-huh. Yes,
let's
yes.
share my
Yeah.
screen.
And again, we are open to any other, if we have underwriting. I know I sent that one underwriting today about Houston property, but I don't know if it's good or bad. 8.62 cap rate or something, or cash and cash caught my attention, but I don't know
Daryl
how.
sent one in. Daryl sent one in, didn't you, Daryl?
Oh, did you, Gerald? Yeah.
Actually, I just commented on what Vinny sent out.
Okay, okay,
Yeah,
okay.
I just commented
Beautiful.
on that. Yeah.
Yes, 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 yes. Beautiful, beautiful. No, again, we need to keep our pencils sharp. It's good to underwrite so that we could look at ins and outs of the deal. Uh-huh, that's right. I think Ankur is coming in, maybe from the different computer or something. There he is. Yeah, I'll admit it. Right there. Okay. Fabulous, fabulous. All right, Ankur, brother. Yes.
And okay, I'm back. Sorry, I had to
Yes,
change
yes.
like a
No,
setting.
no
Uh, all
problems.
right,
Yeah.
I'm gonna just share my desktop here.
Yes.
Minimize all of this stuff. All right, so where did the LoopNet go? Okay, so before we get in here, right, like I'll tell you because like with Washington State, right, here is
Mhm.
basically this is the Seattle area that typically people know about, and this is like the very most of your population, your general and your all of your like tech and all of that population, everything is here. Everything is happening in this small area.
Got it.
However, this is Seattle, but this massive thing over here is the Olympic
Ah,
National Forest. Okay.
ah.
From here, right from this point, all the way down to Oregon is the longest beach.
Mm-hmm. Mm-hmm.
Okay. It's like literally spans the entire state, and they're like phenomenal beaches, like all the way around here. And then over this area are like really great. These are like great areas for visiting and whatnot. So
Sure.
this is like one of the, I don't think there are any as big over here. Holy
Small
cow, just
ones,
look at this one.
54. Yeah, look at that.
22.6.
Cabinet.
Hmm.
Ooh. Oh, it's a winery and vineyard. I just
Yeah.
saw.
So
Uh-huh.
this I would be interested in finding out with 22% cap rate.
Yes.
But I'll show you one more thing, Vinny. Over
Tacoma.
on the, so
Yeah,
it's
right there.
huge in, obviously there's Washington State, there's huge in skiing as well. And this
Mm-hmm.
area, Leavenworth, is like an all year round amazing. Leavenworth and Wenatchee is like an all year round. In the winters, a lot of people visit here for Christmas lighting, for skiing, same for
Mm-hmm.
Wenatchee. And in the summertime, people just go there to visit because it's like really beautiful out there.
Oh, wow. Wow.
Oh my
Wow.
God. David, this motel is
Property is this one right there?
one of the properties we had looked into. It's still there. This guy will probably
Oh,
agree to
only 2
100% buy for
million.
that.
Let's buy it for 2 million, guys.
Vinny, it's not. We've gone down the road with this one. Even he'll finance. He'll even do some of the financing. But it's not a great deal. I've got a great deal up in northern Minnesota.
We'll look at that too, brother. We should.
It's
should.
10 cap going in.
Hmm.
But I like resort properties. There's the only hesitation I have, and Encore knows this. What happens if you have another COVID?
Ah,
Yeah.
Encore, you and I were looking at that campground going into what was the park in Washington.
Oh my God, that was such a nice one. It actually somebody bought it.
I know who bought it.
You do?
She's in Protege.
No way.
Oh,
She's
really?
one of the investors in the property. So,
Oh my
God.
gosh.
no, she's an investor I met today. Remember I said I met an investor?
Right,
Yeah,
right,
yeah,
right.
yeah.
Yeah, she
The
retired.
high net.
She retired from a major corporation. I'm not going to say it on the recording, but when I
Yeah,
say
yeah,
Totally, totally.
corporation, a probably $100 billion corporation.
I
Okay,
love it.
okay.
Love
Yeah,
it.
because
Love
that
it.
was like at the gate of Mount Rainier National Park. That was a good one, but the seller was like not
Cooperative or?
yeah,
Ah,
cooperative to any kind of like alternate financing or whatnot.
I see.
You could have gone in conventional also, but anyway,
How much
there
was it, by the way? How many millions
was
was
not
that?
much. It was like less than 3 million, and there was like scope also. So I
Ah,
think that was a
oh,
mistake.
it's
I
okay.
yeah
Hey, opportunities come, right? We'll pull the trigger, right?
yeah
That's the
yeah.
exciting
But
part.
Hey, can I
go
pause
ahead,
for
please. Yeah, I'm gonna stop
while
this.
we're looking at the map? I don't know Franco. Hi, Franco. We're,
Yeah.
you're driving down the road, and I'm like, we haven't included
Yes,
you at all. How you doing, Franco?
good.
Yeah. Tell us
How are you
more,
guys?
Franco. How are
Can you
you looking? Franco is a vice president with PNC Wealth Group. So PNC is big group. As when go ahead, tell us more, Franco, brother. I know you're
No,
getting into multifamily and to commercial and into all those things yourself.
y- yeah, so I was in the residential, I am in the residential side, and I want to jump on this call and learn a little bit from you guys. And surprisingly, over the last half a year, I've been starting to get requests on different commercial properties. Recently on a multifamily, we talked with Vinney out in Maryland.
Yeah.
So I'm just trying to take a little in from you guys, learn, and I come across different people. Vinney, you brought up Airbnb. I happen to have a friend who's also a client that's really successful in the Airbnb business.
Oh,
So
wow.
that's someone you
Wow.
might want to talk to as well. And I think that's
I would
probably
love
what I
to.
can bring is, yeah, I'm a social butterfly, and I have different people from different walks of life that invest
Mhm.
in, just knowing different people, and I'm trying to learn a little bit and see what I could bring to the table.
Excellent, excellent. No, that's fantastic. Again, Airbnb as a company, it could go, but as an operator, if we find right, good, solid properties, I'm just thinking about what I saw was a whole different today, which was like decapitated home. And that's what this investor just changed it because that's what he's best at to. And I've done it too, by the way. I've gotten in Texas those kind of properties, Monaco villas. Daryl, you were in there. Many of them, Sienna villas, all that. I bought barren studs and everything. It didn't bother me because I knew I'll be able to convert it into something beautiful. And that's what this is. If we can buy it right, and I'll show some numbers as he comes back from India. He's in India right now. He went there and he's selling his properties there some, and then he's coming to Chicago. Of course, his family was here. And anyway, but the key thing is there are opportunities out there. We should be open-minded to it. Yeah, yeah.
So
So
Vinny,
let's talk. Yeah, please go ahead. Huh?
that $16 million property, is there any, why would somebody buy it? And the reason I ask this is I have somebody asking.
Oh, why? Because there is upside to it, brother. If somebody is looking at, there is nothing in Knoxville, there's no multifamily for sale. We bought it at the right time. Hopefully, I thought maybe we bought it wrong because I was trying to sell it from 12.5 to 13.5, 13.6 million. Then I did a BPO on it, and Monica worked very hard, our daughter. I can't take credit. We meet with our RAM partners only 10 minutes a week. That's it. But that property manager and the maintenance tech, they are the brain of the whole property. We changed the whole demographics, 107 units only. It's small for our portfolio, but we increased the rents by $600. We knew it going in. That's what the value add was. And then rub system, we brought it in and all that stuff, right? So it went from 12.5 to 17.4 million. It's being sold right now. Again, I'm reporting, but it won't go, into
So
their
is
years.
there
But
equity on closing? What's,
what is it? Oh yeah, it's closing end of month,
oh,
end
it
of
is closing.
February, I
Okay, so
think.
you don't, okay, I didn't catch that part. All right.
Yeah. Hopefully, but if you have a offer, it's 17.4, and this doesn't close, then we will, look at another one. I don't know. You said that what would you do with it? See, the
Not
thing
me.
is, you
I've got
got
a friend that had heard and he wanted to Did you got it in, you got it under contract and you're supposedly closing? We'll
Yeah,
see.
yeah, yeah. Oh, it's going on for 3 months, 3 to 4 months already. Due diligence, all that stuff and everything. Yeah, 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 yeah. They are assuming Freddie loan, which I locked in at 5.61%, and it's got 10 years more to go. So that's the beauty of it. Rather than 7.5 or 8 or 9%, they got a fixed loan. Yeah, yeah.
Okay.
All
Good.
right. What should we? Oh no, go ahead, Stephen. Yeah.
No, I said, cool, thanks. Appreciate that.
Yeah, yeah. So, Dave, you want to share, brother? You were saying something in Wisconsin or something, right?
I was muted. Sorry about that. How Daryl, did you have a deal you wanted to underwrite, or is that just
Let's do it. Or that's
Oh, not yet, but
Okay, okay.
hopefully soon. Yeah, thanks for
okay.
thinking about that, Dave.
Sure.
One of the things I was thinking about was in terms of some of the profiles of opportunities, what kind of financing methodologies, and Vinny and Dave, you both have talked about this a lot, but
Mhm.
under these interest rate circumstances that we're dealing with now, and the economy as we're dealing it now, is there a preference for particular borrowing strategies in order to acquire a property?
So I will answer it from the smaller property standpoint, not the Vinny level property standpoint. Here's the
Yeah.
so there's a lot of people who are selling right now you can take over their loan at a much lower interest rate, 3.5%, 4%, and they might have 3 to 5 years left on that loan. But because they're trying to sell at an elevated price, you might be taking over a loan that gives you 60% or even 50% of the value they're trying to sell at. So the goal is, and this is always my goal, is to look at that deal. And you got to get with the agent and say, look, if you want your commission, I'll bring enough cash. This is how you get the broker to work for you. I'll make sure we bring enough cash to this deal to make sure you get your commission. But here's how I want to structure the deal. I want to take over that. I want the seller to put their money where their mouth is. And I want to put them in a second position. If they're unwilling to be in a second position, then this is probably not going to work. But it works much better if they've been on the market for 180 days or more. There's a lot of lots of deals, and you want to make sure you're buying in a good market. I'm not hunting multifamily, but I have a lot of brokers calling me from the 2 years of hunting multifamily deals. They're like, hey, I've got this, everything you ask for. Would I turn away a multifamily deal if I could get the terms, take over a 4% mortgage, and then maybe a 3% second mortgage, and all I have to do is come up with enough money to pay the broker commission? That's an easy transition. And a lot of sellers are in that position, but I don't think you're going to find those deals in most of the markets where you'll find those deals are hyper supply. And what's funny is Jacksonville is hyper supply right now, but you won't find those deals in Jacksonville because people know what they have. Jacksonville's a great market, but you can find those deals in San Francisco, Oakland for sure. You're going to pay more per door in your area, but the money it brings in is crazy. But what I mean by your housing market is so high, but the question is, and Vinny doesn't invest in California because of this. There's rent control, so the government will tell you how much you can get and what happens if there's another COVID. From now on, we have to ask ourselves that question. I believe if you're going to invest, what is the effect of government regulation, which is why I think I'm moving to more of the flexible space, light industrial. I like that because if my tenant is a plumber and the person next to them is an electrician, the person next to them is a landscaper, are they going out of business because of a COVID? Chances are really slim. That plumber, like people, as long as they're going to push flush on their toilet, plumber's not going out of business.
Not
Okay.
at all. Not at
You know,
all.
if the sewage starts backing up in the tub, that plumber
Wow.
is always going to have work. So when
Yeah.
your tenant is someone who is unaffected by these impactful things that the government can pull, I think those are good assets. But multifamily will always be a good asset because everyone has to live somewhere.
Live somewhere. So true. So true.
It's
Again,
great
just
news.
buying it correctly. I think the biggest thing, printing of money, which is happening as we speak right now, that has hurt us. And by increasing the interest rates, inflation, I don't know where it is, real inflation is at, but everything is way high at the grocery store and everywhere. The biggest thing is election year with all the jitters, the inflation not under curb, and interest rates. Now Fed is saying, maybe, brother Franco, what have you heard? I heard today that they may not cut down the interest rate even in June now. Wow. It was
Yeah.
supposed to be March, and they said 3.25 cuts. That's 0.75. They increased it 21 times 0.25 last year and a half, 21 times. So it's just mind-boggling that these three also, they are not saying. They say it may not happen. What's your thinking on that, Franco?
I think that they're holding off giving any good word because they don't want the inflation to spark back up. So if they were to come out and say, yeah, look, we're going to start in March, the rates would drop, they could have an inflation issue. They don't want to do that ahead of, again, we're talking about the election year. They're probably, I'm thinking by May, they're going to do some type of cut. They
Okay.
just, they feel like they're taming inflation enough at the moment, and they want to hold it off for a little bit longer, and they'll
See.
come out and do it. I
I
don't think they're
see.
going to do something where we're going to wait till June, July, August, and then start. They have to do it ahead of time to get your average person out there feeling that buying a home is possible, their credit card rates,
Yeah.
all that stuff is going in the right direction before the election. And so they have to start the cuts ahead of time in order for all that to trickle down. Not that there's trickle down, but so I think by no later than May, you're going to start seeing the cuts. And around that time is when they'll start. And by maybe July, August, it'll be in full force in order to give the appeal of a bettering economy and the flow of money again.
Oh, thank you. Thank you. That's a
I
good,
think there might
great
be
perspective. Huh?
another thing, Vinny, you led to it a little bit, but BlackRock was the company you're looking at. They got to have
Yeah.
$1 billion set aside for when the winter comes. But
Foreclosures.
here's the really cool thing that I don't think a lot of people have put a thought into. Kids don't want to buy.
Mm.
Younger generation do not want to buy. They want to rent because they
Correct.
move all the time, right? That Elon Musk just came out with this little cubicle house thing, right? They don't want to buy, so they want to rent. So that's another reason why it's such a good reason to stick with the multifamily or apartments and things like that, because they just don't want to. They don't see the value. It's not like when we were, oh, you buy a house. And they are starting to understand that's not that's an expense, that's a liability, it's not an asset, right? They understand. They can TikTok that for a minute and they understand, right? So they understand that. So it's interesting. And they don't have as much money at their age as we did when we were working. They're just not workers. You can see it in even my wife's business. We're restructuring her business just because of that. So it's interesting. Everybody is entitled to get everything and do nothing. So anyway.
No, good point. What you're saying. Yeah, yeah. I think the millennials are different. You could definitely say
And
that
their
for
kids.
sure.
Let's not forget their kids. I forget what you call them, but
Yeah, they are kids. They are kids.
no, their kid, the millennials' kids are growing up. They're coming into play.
I think the
That's-
difference, Stephen, when we were kids, I think I was probably making, when I say kids, I look at my daughter who is out of college. She's basically a year and a half out of college. She makes $70,000. Her apartment is $1,700 a month for a
Wow.
1-bedroom apartment. By the time you had a car payment, insurance, and food, she has no money. At $70,000 a year. Now, I don't think when I was her age, I probably made, if we don't include the sale of marijuana,
Uh-huh.
I probably made. Vinny, that's a joke. It's. I was a young kid, but I probably made $400 a week at the time, and my apartment was only, was less than 1 week's pay. The difference, that's the difference today. Taxes eats 30% of that person's wage.
Yes.
When we were on a struggling wage, the government really didn't take anything. Everything you paid in, you got back. At 70,000, they'd still take 20%. So it's a different world I think our kids are living in today. And what I tell my kids is, yeah, you can't live in that world. You got to be an investor, because if you're not an investor, you live in their world. And that world is going to keep you broke, because
that
you're
is
going to keep printing money, and then your money becomes worth less and less. So you have to stay on the side of the printing the money. And the only way to do that is to be in assets that generate cash flow. And like Vinny, and you look at cap rates, I look at what asset will bring the highest cash flow.
Cash and cash. Cash is the only king that you can take to the bank. Cap rate you cannot take to the bank. You can't put it in a plate or wallet or something, but cash flow you can. Definitely.
I've got this house we're finishing in Georgia. It's done. It'll go on the market tomorrow. I got $200,000 of equity in it. And the problem is you can't buy food. You can't make car payments. You can't do anything with equity. Cash flow is the only thing that matters.
And refinancing is not that good right now.
And refinancing not an option. So I'm selling and I'll get my money. But the point
there
is,
we go. Yeah. And then 1031. Yeah.
Take the money, do a 1031 exchange into cash flow.
So true. And I do want to say something is that I do play stock market. I'm not professional at it, but I have been making good amount of licks with good solid companies. So today I spent some time with a good friend of mine from Ottawa, and he's the one I mentioned early part of this. Again, I'm not a CPA, I'm not financial advisor. I may be becoming one though. I'm going to go for learning that, and it's going to become me title, whatever it is. I'm going to do some securities things that's in the future. I really want to learn, but this is Google stock. Google stock is down. So I posed to him today and I recorded the whole thing. He gave me 30. I'm just saying that it's just what he shared with me, 37% growth. He got in his fund that they meticulously look at good solid companies to buy and then hedge them when they go down or things like that. But Google, this is what it is, rate of growth 1 to 5 years, 13.44. He showed me in this whole video. I might cut it, and if anybody's interested, but he went to all free websites, 3 of them, and all the information is given there. He took the information, put it into his underwriting template, which he designed with the formulas and everything, just like mine. That was very fascinating. You only put numbers in this yellow or orange, let's say, and then it calculates all these things about the price of the stock and if it's overpriced or underpriced. And look at that. Oh my gosh, Google, all these numbers, growth rate 6 to 10. He shared with me how he found that 10 to 11 to 20 right there. Then he showed me what as compared to S&P, all that stuff. Are you able to hear me? Yeah?
Yeah.
Okay. Yeah. Then here, operating cash flow, the whole thing. He showed me revenues. He showed me every company's trends. Oh my gosh, I learned so much in just 1 hour. It was mind-boggling. And then the best thing was this one. Not only here, this one, that's the current price of the stock right there. And then this is number of outstanding shares, how many millions. So this 5,690,000,000 is total shares of Google out there, people own right there. Some hedge funds, some others, some individuals all that operating cash flow, that is cash flow from operations. He shows all that free cash flow. How much is it? It's not taking the money from assets and all that, but from operations, just like what we look for in real estate. I saw so many similarities between what I do in underwriting and what he did in finding if this is a good stock or not. That's very mind blowing. And then cash equivalent, short-term investments, short-term debt, and then long-term debt. So all those formulas, when he put it out there, the stock price is 143. It could go to as high, the fair value. This is the fair value of Google stock is $374. So we have a discount of 62%. You think I bought Google today? I bought it 3 times today. So that it's at the lowest point. I think their earnings just came a little bit bad. And he showed in the graphs also. I might do that just as teaching with him. And it showed that when people are panicking, that's when the hedge funds buy. That's when he buys dollar cost averaging, which I've been doing, by the way. I'm churning my money in Robinhood. I don't know if I mentioned to you all one time, I made a lot of money last year, 2023. 2022, I lost, but that's okay. I doubled made in the last year. But the thing is, you are able to look at some good solid stocks. If some bad news comes, that company didn't do it overnight, right? Things happen. So that was one thing. And are you ready to look at another one? Look at this one. This is Apple, which is the darling of our eyes, right? Everybody loves Apples, Apple iPhone, Apple computers, everything. And this is what he did right in front of me. And we recorded the whole thing. Again, we are not saying buy or sell or nothing. It's just, for entertainment purposes only. I'm sharing this with you all because I'm so fascinated. And how many billion stocks are there? Right there at $186, today's market, there are 15 billion 550 stocks. That's why the company's trillion market cap, right? Operating this. Look at their long-term debt is so high. Everything is very high as compared to Google. I just shared. And then you go beta, how much is it and all that. Now, this is the price. Guess what the fair price is? 150. Oh my gosh. So at this time, people who are buying Apple because of what is happening, again, it's for long term. That's another thing I want to say here, what he and I talked about. He says, Vinney, there are places where it's a rolling stock and all that, what you do sometime a week or 2 weeks or 3 weeks you sell. That's different. But this is like to really see what the fair value of the stock is anyway.
What amazes me about Apple, and I don't know that there's many, I believe I've heard they have $1 trillion in cash.
Trillion? No,
$1
it's right
trillion
there. It's right there. Free cash.
That's
This is it right
that's
there.
cash flow. That's not operating cash. They have reserves of $1 trillion.
Reserves. Oh,
Yeah.
but that should show up over here. Cash.
Reserves in a
equivalents.
publicly traded company, reserves are considered off balance sheet. Because because they're so it's not balance sheet items. And so those are things that I don't know how much Bryn has at Google. I get, but I remember Patrick Bet David talking about Apple having $1 trillion in cash.
$1 trillion cash.
And no corporation had ever accomplished that before, and they were the first. That's amazing to have that kind of cash. Now, granted,
for sure.
If your expenses are, let's just say, $500 million or $500 billion a year, that doesn't sound like that much. But
reserves. Apple. Apple have, right? Or something. I'm just curious. Look at that. People did offer. They did ask for it. Oh, Apple's 162 billion cash reserve puts into perspective. Apple has so much cash that it's bigger than the market cap of Uber what? Beidou and Spotify combined, it could buy Nubank, the biggest digital bank in the world. This is as of November. So maybe, it is very possible they do have hidden cash, what you said.
Well, that's it. The 166 is probably what they have now. You got to think.
They might have bought some companies, huh?
Or they lost money on stuff.
Yeah.
Like even
Yes,
Elon
yes.
Musk. Elon Musk will go. He'll have $100 billion like surplus, and then he blows off a rocket, and his stocks like plummet because the rocket blows up, and all of a sudden he's down 20 billion. It in that game, you play that game. That's not even like a relatable to me. But your buddy with the software, what I like is he looks at all of the numbers and then says, nope, don't buy Apple right now.
Yeah. And that's what they have done in their company, in the fund. There are 6 partners. It's from Florida, by the way. The company is from Florida. And it's a family and friends fund, 506B. And that way. But the key thing is it's, I think, 7 or 8 million, small boutique fund. But then, and anyway, I got introduced and now I just wrote another addition to it. And I'll be wiring the money tomorrow and so on before I leave. But no, hey, what a session. Thank you so much for joining. And I hope it was worthwhile. And again, Brother Dave is going to be doing it next week, brother. Is that okay, Dave?
Yeah, and make sure that I will be here next week. We might I will have something great in store for you guys.
There we go. There we go. That'll be fantastic. Fantastic. Thanks again. And I'll see you in about 3 weeks and maybe send a couple of pictures. And if I could join, I don't know what time difference will be in Argentina and Chile.
Have a good time.
Yeah. Thank you. Thank you. God
Enjoy
bless you. We'll
Great.
talk to you. Okay, sure. Bye-bye. Bye-bye.
Safe travels.
That's all for this episode of The Investor Impact. Stay tuned for the next episode and don't miss out on the opportunity to learn and grow alongside this powerful inner circle.